why I lend money to myself instead of borrowing from banks, and how self-banking concepts give you complete control over your financial life. This isn't about avoiding the financial system, it's about becoming your own financial institution. The concept. Instead of paying interest to banks, you pay interest to yourself. Instead of following bank policies, you set your own lending criteria. Instead of bank profits, you keep all the returns. Here's how it works practically. I built a substantial investment portfolio that serves as my personal bank. When I need to buy a car, instead of getting a bank loan, I borrow against my portfolio at low margin rates. The mathematics. Traditional car loan at 7% versus margin loan at 3%. I save 4% interest annually while keeping my investments growing. When I repay the loan, the interest goes to reducing my borrowing costs rather than bank profits. But here's the advanced strategy: using whole life insurance as a self-banking tool. These policies build cash value you can borrow against, while keeping the underlying investment growing. The real power is velocity of money. The same money works multiple times. My investment portfolio generates returns while simultaneously serving as collateral for borrowing when needed. This works for major purchases: cars, home improvements, business investments, even property deposits. You maintain investment exposure while accessing capital for immediate needs. The requirements. Significant initial capital, understanding of margin requirements, and discipline to repay loans to yourself as diligently as you'd repay banks. But once established, you control your own credit decisions, interest rates, and repayment terms. Comment. Control if you're interested in building your own personal banking system for financial independence.